Most welcome to this budgeting with Excel webinar. It's always my pleasure to present before CPAs. Sharing ideas about accounting and finance is always my pleasure. Excel is something I do as part of easing the way I work. So members, you are welcome. We have 2 days and 2 hours every day for this particular topic. When I was asked to do a presentation on budgeting with Excel, I was like, where do I start from? Do I do a personal budget? Do I do a Kwanjula budget? Do I do a budget for my spouse to go to the market? We'll do all kinds of budgets. But I was like, okay, how best can CPAs get something from this training? So I thought all around, and then I said, okay, I'll try to have a mix of different things so that people are able to pick a few ideas here and there. So let me first talk about Data House. I'm a partner at Data House, Certified Public Accountants of Uganda. And Data House also has Data House Business Solutions, which does the training and consulting. So our mission is to help professionals like yourself work smarter using Microsoft Excel. If you're an accountant, you definitely know that Excel is your toolbox. You will not complete a task without using Excel somewhere. Whether it is for your financial reporting, data analytics, or anything, you always have Excel as your go-to tool. So we focus on just a few Excel functions. We don't take you long journeys of so many functions, telling you about Excel from A to Z, and then confusing you on things that you're never going to apply in your life. But we focus on those few functions and formulas that will enhance your productivity by simplifying and automating your tasks. And you'll see that in today's topic, although most people think for you to be good at Excel, you need to have advanced Excel. In today's topic, there's nothing advanced about it. It's just you being logical and understanding the finance you did in class and applying it here. So you'll find very, very basic formulas that we are going to use. But the most important thing is being logical and being able to apply Excel to your finance and accounting knowledge. Before the lockdown, that's how we're doing things physically. You'd come in a class and we'd be there interacting and chatting and having coffee at certain time. And by the end of the training, we'd be knowing each other face to face. But right now, I can only see numbers on the screen. I don't know who is there, who is listening, who is chatting with who. But that's the new normal. We have to move on. Those are some of our clients. And today's session objective is to just give you participants Excel knowledge and skills that are necessary for you to prepare some budgets and forecasts efficiently, and of course, with greater accuracy. And I believe this will give you an understanding of both the principles and the practical application of budgeting techniques to real business situations. So, since we only have 2 hours for today and 2 hours for tomorrow, and what I have is really, I think, much within that time, I'll try to skip the literature. I've shared the slide and the Excel file I'll be using. I've shared it in the chat, so you can always download them and follow up. But I'll skip the literature here. Those things of what is a budget, what it does, all those funny things you can read for yourself. But let me go to how we'll use Excel in budgeting, because I believe that's why we're here. We're not here just to learn what a budget is, what it does, what all those things are. Those are there. They're in the slides, so you can read for yourself. So before I actually start on what I have prepared today, I just want to give participants here an idea that if you want to use Excel for budgeting, then you need to know what is it you want to do. If it is something really basic, there are already some templates within Excel itself. I'll show you where to pick them that you can always just go to, download one of them and use them as they are. Or if you are in organizations like, say, for example, NGOs or other organizations, most times these people prepare their templates and all you have to do is fill in numbers. So for today's session, my key focus will be on business side of things, because that's what we all did at school. We'll do a business side of things, look at how do you come up with an idea, how do you work through it, how do you come up with your budget maybe for the next 12 months. And we'll be looking at all the three financial statements, the income statement, the balance sheet, and cash flow. So that's the scope I will be covering. So for me to do that, I'll have to take a modular approach. One is to come up with my budget assumptions and drivers. Once I've come up with those ones, then see how to link those ones to my income statement, the balance sheet, cash flow, and of course, you cannot complete the three without any supporting schedules. Ideally, every line in your financial statements, the income statement and balance sheet, is almost a budget of its own. And how you go around it depends on what you are really looking at or what you are looking for. But you'll find that income, you'll need a model to compute your income and come up with it. The cost of sales, you'll need something to do that separately and then link it up to your income statement. So are your operating expenses and all the other lines down. Similarly with the balance sheet, things like your debtors, you need a schedule for that. Your creditors, you need a schedule for that. If you have inventory, you will need a schedule for that. Of course, cash is a balancing item, and we'll see how that links up. But that's what we are going to cover in these 4 hours, 2 hours today and 2 hours tomorrow. So if you allow me to just first go to Excel, I'll come back to that presentation later, so that we can look at a few things before we get lost into Excel. Let me just open an Excel file here. I hope everyone is able to see that. So ideally, if I start from a blank worksheet, if I'm looking for any idea of what I can do on the budgeting side of things, and maybe I just need an event budget, a Kwanjula budget, a wedding budget, or a budget for my household, I don't need to struggle so much. Excel has already sorted that issue for me. If you go to File and you click New, you'll see up here there will be suggested searches. That there's a section for business, for personal, planners and trackers, and there's a section for budgets. So once you click on budgets, it will search all the templates available on budgets, and you can see personal monthly budget. If that's what you want, you can start from there. Monthly company budget, if that's what you want, you can start from there. Let me start with this personal monthly budget so that you know how to get it. So when you click, it will not download automatically. You have to click on create here. So when I click on create, then it will go and download for me. So I click create, and you can see downloading your template, and bang, it comes there. And you can see that it has some instructions on how to use this template. And then you have your budget there. And depending on if this is what you're looking for, you put your income there. Maybe that's your salary, your side hustle in the extra income, and you have your total salary. Maybe it is for a month or it is for a year, I don't know. Okay. Then you come here and put in your expenses. So the templates are there, and there are very many of them. Some, of course, you need to really know what you're looking for. You need to edit some of them. You need to probably adjust them to suit what you need. Of course, you will not just pick it and use it as it is. Sometimes you really need to just turn it around and get what you want. So expenses, you put them there, and you can put your projected, that's your budget, and then later on feed in your actuals and then to give you the differences or your variances. So this is where you get some free help from Excel. Just simply go to File, New, pick the section you want, whether it's personal or business. If I go for business, you'll still find budgets are still there, invoices are there. There are so many templates for as many uses as you have. It's up to you to go in and look for what you really want. Then for our colleagues, say in NGOs, for our colleagues in the NGO sector or any other place, for example, if you're using the activity-based budgeting, again, there's really nothing difficult here. Most times these are given templates. Somebody will structure a template, for example, the one I hope it is on screen for everyone to see. So you have your output there, which your activities will be linked to. You have activity 1.1, 1.2, then the description of that activity. And for each item, you have to cost it. So you go through the detailed costing, how much is going to be personnel, the research consultant, blah, 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 the number of days, the trips, the unit costs, and then you come up with the total. And sometimes you may want to allocate this to quarters, depending on how you want. So this one, these are normally easy to use. Somebody has taken the trouble to sit down and think of what they want. But the challenge you find with these templates is consolidation. You find each department or each unit or each project or whatever has filled something similar to this. And probably you have like 20 of them coming to you, and the issue is how do you consolidate? So sometimes it becomes problematic to consolidate. But at another opportunity, we can look at how to ease this, because all you need to do is turn it sort of into a database kind of thing and then move around with the consolidation. Then you also have these kind of templates where, for example, you are budgeting, say, for personnel, and you're saying a person like myself, maybe you're projecting that person will have 100,000 in a year, and you're like on program 1, program 2, and 3, he will be contributing his effort as specified in the percentages there to administration so much. So here you simply have to recall your self-referencing to the arithmetic, which is simply equals what you have there. But remember, if you're going to copy, then self-referencing applies. We'll look at that in more details. And so you make sure that what is locked is supposed to be locked, what is free is supposed to be free. But we look at how to do that. And I lock the column times. My internet connection is not behaving well. I don't know whether that is true. I hope people are able to follow what I'm doing, because sometimes being the other side and I being here becomes. So when I link that across, you'll find that I'm able to split the 100,000 by the percentages given, and that is also a budget. But today we are not going that direction. This is just to give you a flavor of what other things other than what we're going to do at that arena of budgeting. So for today, we are going to have a case study here. We're going to have a case study, and it goes as follows. You have been planning to invest in a side hustle to supplement your salary income. You share your plans with a friend who informs you about a colleague with a coffee machine for hire. After some days of thought, you approach your friend again about the possibility of vending coffee at a busy shopping complex. You register your business as Daily Cafe and carry out research that makes you arrive at the assumptions below. You finance this business with a loan of 5 million from CPA Sacco at 3% interest per month. So that's what we're going to look at. And of course, what we'll be doing is see whether we can come up with a budgeted income statement, balance sheet, and cash flow for 12 months. I hope the time will be enough. And I think you can now see why I'm running away from a lot of the literature part so that we can focus on the actual Excel stuff we're supposed to do. So if you allow me share my slide again. I hope it is visible. So we have reached here. I was talking about a modular approach. I was saying that for each of the 3 financial statements, I'll begin with very good assumptions. These will drive my income statement, balance sheet, and cash flow. Without these assumptions, then I can't do much. And what I've tried to do here is to run away from where I have historical performance, and then I'm supposed to only just forecast what is going to come ahead. Here, I'm starting from real basics. Well, you have seen the case we have. You have a business idea, done your research, you have some assumptions you have come up with, and then we are supposed to see how do you progress from there and actually come up with these financial statements. Because it is easier if I just came up with, say, historicals for maybe the last 3 years. I have income statement, balance sheet, and cash flow, or income statement and balance sheet, and then I say, let's now do the forecast. That one is easier. But this one, I think, gives you the real flavor of where to start things from. I hope it is. Members, can you give me feedback if the network is fine on your side? Because I'm being asked here whether things are right. Seems there is a problem. Are we communicating?
We are hearing you.
You're hearing me. Oh, that's good. Okay. So it would be easier for me to have the income statement and balance sheet and then maybe plug in some percentages and forecast things going forward. But the example I brought here gives you a real flavor of how to start things from scratch and then come up with these 3 financial statements. So for us to be able to come up with a good Excel file for our budget, we need to have at least these 3 in place. Our inputs should be clearly defined or identified, and these should only be entered once. So you cannot have an input here and then you are referring to again on another sheet. It should only be in one place and should only be entered once. Then we shall have the processing section, which should be transparent, easy to use, broken down in very easy steps, and of course, easy to follow. Because when you're doing this, when you're doing a budget, especially for organizations, you're not doing it for yourself. If I do it for myself, I may want to make things as complex as possible because I know that I'm picking this from there and I know the logic behind it. But you imagine the person going to look at your spreadsheet as a very lay person who needs to understand exactly what you have done in very easy way, in very easy steps, simple and easy steps. And of course, the output should be easily accessible for the users of your spreadsheet. So when we go into more details, the inputs, your objectives that they should be accurate, they should have reasonable data ranges, they should be easy to use, easy to understand, and easy to update. So for you to achieve that is that you have to enter each input only once, use color coding to differentiate inputs and outputs. Of course, where possible, where applicable, you can use data validation. Today, we may not go into that area. And of course, comments for people to be able to know what you are doing in certain cells. So if you feel that a certain calculation needs to be explained, please use the comments. And then for the processing, the objective is to have it easy to maintain. So when things change, you should not start seeing errors. It should be accurately processing what you intend to process. And please don't hide your formulas because it has to be transparent. People need to know what you are actually trying to do. I know some mean people, after they have done all the hard work, they will go and hide formulas. So somebody puts a cursor there and all he sees is just something blank. He doesn't know what that cell is actually doing. Please leave those formulas open for people to know what you're doing and for people to be able to track whether your spreadsheet is actually computing things, processing them accurately. So please don't hide your formulas. We need that transparency in what you're doing. So for you to achieve those objectives, you need to break down where there are complex calculations, break them down into simple steps. So instead of having one very long formula, have different calculations in different cells that eventually lead you to what you want to calculate. So again, use comments and annotations. Formatting is very important, where certain things need to be bold, certain things may need to be in italics, certain things may need to be colored. Then calculate the final figures, which will go into the output reports. So that's the part of the processing part. We'll see how it works. And then your outputs. This should be able to provide the key results to aid decision-making because that's the real reason you're doing this. At the end of it, you want to make decisions, whether you really can sustain the budget you have come up with or not. The output should also be easy to understand and it should not be ambiguous. So as you do these things, be mindful of what you're trying to output. I remember that thing of garbage in, garbage out. Please avoid that. Try to be structured and put in things that will give you information to aid decision making. So output should also be modular. Consider creating a summary section with only the most important key model outputs. So instead of having all these calculations and you want to output them to a person who actually does not understand them. For example, if your income statement is too big, you may want to only consider key lines that maybe the next person is interested in, maybe income, maybe your gross profit, just key lines, not everything as you may want to have structured it in your spreadsheet. So try to have a summary somewhere so that whoever is following your spreadsheet can start from and make decisions. So that's the layout, assumptions and drivers. These are figures which drive our budget. The income statement will summarize our company's profit and loss. The balance sheet, this is company's assets, liabilities, and shareholders' equity. The cash flow, this will report the cash generated and spent by this company. And then we'll do our supporting schedules. For example, we have the debt schedule. If we had fixed assets, we have the property, plant, and equipment schedule. We'll also have maybe calculations for our income, cost of sales, all those kinds of things. For balance sheet, you normally, this is from your finance and accounting class. Receivables, you know how to do it. Payables, inventory. Yes, those are the basics we learned in class, and I will not waste a lot of time on that. For our cash flow statement, we'll have, of course, cash from operating activities, investing activities, and then financing activities to give us the net cash movement, which will then add to the opening and to give us the closing. Okay. So the key message after this training is that you understand the key structure for building a financial model, which is your budget model in Excel. Of course, follow some best practice. Build a model step by step. Don't just rush into it. Do some planning and build it step by step. Properly link your 3 financial statements, the income statement, balance sheet, and cash flow, and keep practicing your skill. Even if you understand everything 100% after today and tomorrow's training, if you're not practicing that skill, in a very short time, you'll have forgotten everything we have done. So keep practicing that skill. So let's look at some best practice. Always plan ahead, very important. Don't rush into plugging your numbers in a spreadsheet. Try to plan ahead and see what is it you want to come up with, how are you going to do it, what are the key lines that are going to go into your income statement, balance sheet. Use color coding to distinguish between inputs and formulas. So where there are inputs, maybe mark them blue and leave those calculated areas to remain in the normal black. So build a standalone 3-statement model. So you can choose either to have your income statement, balance sheet, and cash flow in one worksheet, or you can choose that all these are in a separate worksheet. The choice is yours, the result is the same, but let them be standalone. Clearly separate assumptions or drivers from the rest of the model. So have one sheet that is clearly for assumptions, so that if you want to make a change on anything, it is only that sheet that you go to and your model continues working properly. You don't have to keep moving from one worksheet to change here, change there. For as long as these are inputs, they should all be on one sheet. So use clear headers and subheads. So where there are headers, please make them clear with bolds and shading to clearly distinguish those sections. And of course, I've already said use comments. So please make the use of the comment section. Try as much as possible to use just trying to get to speakers. Are we able to communicate now? Hello?
Hello,
I
can
have
hear
feedback
you.
whether you're able to hear me on that side.
Personally, I can hear you.
Is it okay?
I can hear you. I
Just
see
bear with
the
us,
chat said
editors. Fixing
people are hearing
something
you from the
over here.
chat.
Okay, I'm told it is fine to go. So okay. I hope you're able to hear me. I'm now like a pilot here.
You are loud and clear.
Oh, good, good. Okay, I was here. Okay, so I think the last time I was speaking was that use clear headers and subheads, put bolds where necessary, so that, or shading, so that this clearly distinguishes your sections. I already talked about cell comments, where you feel something needs to be explained so that somebody looking at your spreadsheet is able to understand. Please put comments to describe your calculations, assumptions where necessary. Put in error checks so that as you build your spreadsheet, you are able to know whether your spreadsheet is returning some errors or not. Sometimes it's good to change numbers to 1, because when you put a 1 in the assumptions, then you can see how that 1 is moving. So where you know a certain number is supposed to grow, you may want to go back to the assumptions and just plug in a 1 and come and see whether the calculation is working well. Pull forward or repeat information where it helps users follow the logic of the model. For example, when I'm doing my cash flow, that figure for EBITDA or operating income, it doesn't hurt repeating it in another section, because then somebody knows that this figure is actually coming from that line. Avoid linking to other Excel workbooks unless if it is absolutely necessary. You know, when you link to other workbooks and you send out this model, sometimes people open and just end up seeing error, and it's very ugly and it's very disturbing. So please try to have everything within your one workbook. If necessary, move what is in the other workbook into this particular workbook so that you avoid that problem. One row, one formula, yes. So that if I'm calculating a sum for that row, it should only be calculating sums all across the sheet, not having a sum in one cell in the same row and an average in another one, and it's confusing. It has to be one row, one formula. No hard-coded numbers embedded within formulas. For example, divide by 365, where 365 is punched in the formula, or divide by 12. So have all those in your assumptions, so that if you need, instead of 12 months, 6 months, you just change from there. So no hard-coded numbers. Again, keep formulas and calculations simple. Break them down into smaller steps. Regular sanity checks where necessary and absolutely necessary, because as you continue building your budget spreadsheet, you need to keep having some sanity checks. Avoid circular references unless necessary. By circular reference, we mean where you put a formula and that cell is also part of the calculation. So that creates a circular reference, and this normally happens when you have certain interest calculations. So if you're doing that, make sure you switch on your iterations so that the spreadsheet is able to solve. Use tables, charts, graphs to summarize important information. They say a picture says 1,000 words. So The graphs are very handy in here. Grouping function to organize sections, we'll see how that works. And of course, use a combination of date functions and if to make dates dynamic. So instead of typing dates manually all the time, and if there's a change, you need again to go back and type the same manually all the 12 months, try to use a dynamic way so that you only enter that date once, the beginning, and the other one should automatically change. Once you have built, remove your grid lines before presenting or sharing financials. So those grid lines are on a guide, but when you now sharing, you please switch them off so that it looks more, your information stands out better. From our toolbox, as you can see, very few things we are going to look at. The most important thing today is cell referencing. That's what we are going to do most. Then we all know what sum does. If, we'll have very little use of the if statement, but we'll use it. If error, just to clean up some errors. EDATE, to make our dates dynamic. IPMT, for our interest calculations. PPMT, for our principal payments for the loan. And then some formatting, because formatting is everything, and print setups. So as you can see, our menu is just that, but by the end of this, you'll have done a lot of cell referencing and maybe the sums. So that's how we are going to proceed. So if there are questions before I go back to Excel, I'll be happy to have a look at them. Let me see if there are any in the chat. I see, or if Ambrose is monitoring, you can let me know so that we can address some of them before we move forward. I think for now, I don't see much in the chat. In the Q&A, there are some. We are hearing you very well. Any chance we'll be receiving the recording? I think I've shared the PowerPoint and the Excel file. It's there. If you check, you'll find it. How possibly can we hide the formulas? I'm saying don't hide the formulas, and somebody is asking whether we should. Yes, you can hide the formulas, but I'm requesting you not to hide because people need to understand what we are trying to do in your spreadsheet. Okay, so let's now go and dive into the real modeling of our budget spreadsheet. It's going to be exciting. It's going to be interesting. That one I can assure you. Okay. I hope the file is visible on the other side. So we have already gone through the reading of the case study, but I'll read it again just for clarity to those who may have just joined. It is simple that you have been planning to invest in a side hustle to supplement your salary income. That's what most of us think about. You share your plans with a friend who informs you about a colleague with a coffee machine for hire. After some days of thought, you approach your friend again about the possibility of vending coffee at a busy shopping complex. You register your business as Daily Cafe and carry out a research that makes you arrive at the assumptions below. You plan to finance this business with a loan of 5 million from CPA Sacco at 3% interest per month. So The location you are saying it is going to be at Open Mall Complex. I don't know where that is. And you're planning to start, let's assume 1st January 2021, or we can change this to 2022 so that we can look forward. So they tell you, maybe you have gone to this, the owner of this mall, or the people around tell you that on average, on a daily basis, about 2,000 shoppers come to that mall. So you look at it and say, wow, that's a good opportunity. And you do your calculations and you say on a daily basis, you can target about 1% in January and February, because March and April are rainy seasons. Maybe the consumption of coffee will go up. Maybe you can tap 2 to 3%, and then down again 2% in May. June and July are very hot months. Again, you are down back to 1%. August to October, maybe again second season of rains, you are back to your 2 and 3%, or whatever percentages you have projected there. And they tell you this mall is not open on Sunday, so your only open days are 6. And then you project that those months have so many weeks. So each January has 4.5. Those are just assumptions. They may be accurate, they may not, but that's how this scenario or this case study has been structured. So these are the brands of coffee you are planning to sell with from that machine, and these are the prices. And from whatever target you get there, 10% of your sales will go to that brand, espresso, 5% to that one, 20% to that, 25% to that, 15%, and then 25% to African coffee. Since we're all Africans, we drink a lot of our own, not those other funny names maybe. Yes, this is just something assumed really. And you also sell some snacks, and you're saying that from your daily number of shoppers, your target, 40% of those will buy a snack, and the average expenditure, because you have different assortments of snacks, those of 1,000, those of 6,000, those of 10,000, but the average is about 5,000. So when you do all your calculations, say, okay, average each one will spend about 5,000 on snacks. Some will spend more, some will spend less, but averagely 5,000. So here we come and say, our cost of sales, we're estimating that will be past 30% of our sales. Our fixed costs, salaries, we are per week. These are weekly. So salaries, you'll be paying 200,000 per week. Rent, the owner maybe asks also for 200,000 for you to put your coffee machine outside his supermarket. So weekly, somebody says you pay me 200,000. The owner of the machine says you give me 350 per week. And you have some utilities, power, water, what, maybe you're paying 120 per week, and some other variable costs of 10% on your sales. So we said you're getting a loan of 5 million from the CPA Circle for 1 year at 3% per month. And of course, 1 year has 12 months. Not everybody buying is going to pay you cash. There may be some businesses around that shopping complex that you're supplying on credit, and they're taking 21 days to pay you. Your inventory, your coffees, what, all those things that you buy, you have 60 days of inventory, accounts payable. You're also holding on people's money for up to 45 days. And of course, we assume a year has 365 days. And we're assuming corporate tax rate is 30%, which will accrue at the end of the year. And this one, the display units, this is to help you decide whether you want to display your numbers in full numbers or in thousands or in millions. or you may even somebody says, please, I want these numbers in dollars. You can always put the dollar rate there, and that eases the working of your model. So these are the assumptions that we have developed for this case. So the first thing we need to do is set up the 3 financial statements. Now, here, my January is in column F. And for these 3 financial statements and everything that I will do, I'll make sure that January is always in column F. That helps me know whether I'm linking properly or not. So here, I've already set up the income statement. I will have revenue, cost of sales, just the key headings. Below that, I've also put the key headings for my balance sheet. And below that, I've also put the key headings for my cash flow. Nothing computed as yet, it's just blank. So for me to do this was to save a lot of time, because I would, instead of retyping all this, I had to do it beforehand. So here we'll come and say everything starts in column F, since our January in the assumptions is in column F. And I'll just, maybe let me go to the assumptions first so that we see what is happening here. Let me first remove this so that you know what I did. So here, this is my start date, 1st January 2022. I'll come here and say equals that cell. Just a minute. So I'll come here and say equals. I click on that cell, just that. So it gives me 1st January 2022. But that's not how I want to display my 1st January 2022. I just want the word January, J-A-N. So I'll do a formatting, Control 1. I select date. I come to custom. And then here, I just put 3 M's. And to give me Jan. Okay. Now, for me to get to the next month, if I just copy this, of course, it will not give me what I want. But I need to use another formula called eDate. So eDate, that's the formula I'm going to use, eDate. So eDate, what this formula does is, equals eDate. It returns the serial number of the date that is indicated, number of months before or after start date. So start date here was initially 1st January 2022, which I've moved to this cell. Now, when I enter eDate equals eDate, you open brackets, it says start date. So my start date is going to be the previous month. So I'm starting from the previous month, comma, and then it says how many months from the previous month. I only want 1 month after. So it is going to increment by 1 month. And when I close brackets, so it gives me that number. Now, for those who are not initiated to dates, you think dates are simply numbers separated by slashes or dashes or dots, whatever you do, but that's not the case. A number is a date is actually a number and that's the number of days from 1st January 1900. Okay, so when you see 44593, don't say what is that. That's actually a date, but it's giving me, you remember the E date was giving us a number. So this is the number of days from 1st January 1900 up to 1st February 2022. So for me again to turn this into FEB for February, I'll do my Control 1, come to date, custom, change what is here to M, and then OK. So you see that is now FEB to mean February. So I can now just drag this to the right, and you'll see it fills all the way up to December. Because what is happening here is when I copy from this cell to this one, you see now it looks at the cell before, E date from the cell before as the starting date, and increments it by 1 to give me that. So as I continue, it does the same. So what it does here is what they call relative cell referencing. The referencing is changing relative to the number of steps I move from where I started my formula. When I get to December, you'll notice it's now looking at November, not January. But in the beginning, when I started February, it was looking at January. When I move to March, it looks at February and increments by 1. So as I copy to the right, the referencing is able to adjust itself by moving 1 step from where I started. Because this one is just 1 column after where January is, so it is just 1 column. So as I move, it maintains that. It looks 1 column backwards, gives me the start date, and increments it by 1. So that takes us to the most important lesson that I told you is going to happen here today. For those who have attended my earlier classes, you have done what we call cell referencing. Maybe let me use this one. Let me try to use this so that we move fast. Now, cell referencing, when we're creating formulas in Excel, when you enter equals, for example, in this calculation, you're not going to say equals 100,000. Okay? Because the 100,000 is already sitting in a cell. So what we normally do is we refer to the cell where the 100,000 is. And that's where the name cell referencing comes from, because we are referring to the cells where the inputs are sitting, not directly typing in the inputs as we see them. We are referring to those cells where the inputs are sitting. But now the challenge comes. For example, I've said equals, and I refer to that cell. So equals D7, and it gives me what is sitting in D7. Now, the challenge comes if I copy to the right. You'll find that as I continue moving to the right, even the reference changes. Because initially it was D7, now it has moved to I7. So when it freely moves like that, that is called relative cell referencing. Simply because it is moving relative to the number of cells from where you made your first formula. Now, if you don't want that reference to change, if you want to continue picking the 100,000, Then those of you who use Excel on a regular basis, you have had something called locking. You call it locking cells. That is the language we use. But the correct terminology should be referencing. How have you referenced? So when you lock, you introduce a $sign. And the $sign is like introducing a padlock to that position. And every cell you'll notice has two references. It has the row, because like this 100,000 is sitting in row number 7, and is also sitting in column D. So the name of this cell is derived from its column and row intersection there. So the naming of the column it's sitting in and the row together combine to form D7. When you move to another one, it is now column E7. So that cell changes the naming. So here, if I want to maintain D7, then I must introduce a $sign. And that I do by hitting my function key 4. So when I hit function key 4, you notice there's a $sign before D, which is the column, and there's a $sign before 7, which is the row. And that particular referencing is called absolute. That means you have locked Excel to this position, D7. Whether you copy to the right, it will continue referring to position D7, or whether you copy downwards, it will continue referring to position D7. So if I copy downwards here, you'll see that D7 is maintained. So you see, still it is D7. And if I come to this one, it is still D7, because both the column and the row are locked. Okay. The alternative is you can lock only the column and not the row. So if I come here and I say equals D7, so here I can choose to lock only the column, and that I do F4 3 times. So you only find the $sign is before the column, but the row is free. Okay. So this means if I copy to the right, I'll maintain D7. Okay. So you can see $D7. And if I copy this down, I'll maintain column D, but the row is going to change because the row is not locked. So you can see now, as I move down, it comes to D11. As I continue, you may find D15 or D whatever, because there is no lock before the column, I mean the row. So that is called it's called mixed column absolute. The alternative is mixed row absolute. So that will mean this time the $sign shifts to the row, the column is free. So this time when I copy this to the right, you'll notice that the column changes. So from D now it has changed to J. And if I copy this down, you notice that because row number 7 is locked, it stays. So that's the most important part of budgeting, if you are to learn anything in Excel, make sure you understand cell referencing. So for this example, if say if you have say salaries here for these two people, it will again be cell referencing. So you'll come here equals the 100,000. So as you move to the right, you want to maintain 100,000, which is in column D. So you lock column D, but as you move down, you want to move to the 50,000, so you don't lock the row. So that will be F4, 1, 2, 3. So column D has a lock. Row number 7 is not locked, times the 10%, which is in column E. But as I copy to the right, I want to pick what is in column F and column G. But as I move down, I want to maintain row number 6. So meaning I should only lock the row, not the column. So you notice the first reference, the column is locked, the row is free. The second reference, the column E is free, row number 6 is locked, because the inputs here for this row, the inputs, the percentages you are seeing are sitting in that row number 6. And yet here, the inputs, the salaries for these people are sitting in column D. So that's why column D here is locked, because you don't want to lose column D as you copy to the right. And here row number 6 is locked because it has the percentages and you don't want to lose it. So that is how you manage your cell referencing. So when I enter and I copy to the right, you'll find that it works out. I can now copy down. You can see that the total there is 100,000, which is equivalent to your budget, and 50,000, which is also equivalent to your budget. Okay, let me see if there are any questions that I can answer. Ambrose, have you come up with any observations for me to attend to? Ambrose, are you online?
Yes, sir.
Yeah, are there any questions for me to answer? Hmm? If there's nothing, I'm happy to move on. Hmm? Ambrose? Okay, let's continue. Can I continue?
Yes, please go ahead.
Okay, thank you.
Welcome.
Okay. So if we take now this to our case study here, that was just for demonstration of cell referencing. So let's now take it to our case study. So I have my assumptions here. The first thing I need in my calculation is to compute what the revenue will be on a monthly basis. Okay. So this is almost coming from the other side. So what is the daily population like? Is my screen on?
Screen is off. No.
Oh, my screen is off. Let me share it again. Sorry, apologies. Okay, is it back?
Yes.
Okay. So what I'm going to do is link my income assumptions so that I'm able to compute my income. So the daily number of shoppers, we pick it from our assumptions. It's what? 2000, I think. So I go to my assumptions, pick that number 2000. This should be in column D here. The daily target. I'll first bring my headings here for the months. Assumptions, I click on January there. Copy and change this to by formatting to date, months. Why we struggle to do this is that once you have done this, these dates can be used for calculations where possible. In some models, there's where we need those dates for calculations. So don't ask me why I'm struggling to have them nicely picked from the other side. So 2000, the daily target, this is from assumptions. I can get the 1% there and again copy this across. Open days a week, I think there were 6, but let's pick it from assumptions. Don't assume anything, because if you want, if anything changes, you just want it to change. So you can see it is, what I'm doing here is I'm just picking a number. I'm picking a number by entering equals. For example, here I said equals. I linked it to my assumptions, so I pick it from the assumptions. It is 6. I enter. Now, with the knowledge of cell referencing, when I pull this forward, I know I just want it to repeat what is in the previous cell. Okay. So here is 6. So it goes to assumptions and you'll see that it picks exactly what is in that. So this is column G, column Q, sorry. So when I enter here, it tells me Q8. So that means my Q on this worksheet is correctly linking with the Q on my assumptions. That's why I told you that if assumptions is giving you January in column F, make sure that all these other things that depend on that also start from column F, so that as you pick these inputs, you can always know that you are picking the correct one. Because if I'm here in column Q and it is telling me R, then it means there's a mismatch. But you want to check whether it is Q and you are comfortable. So number of weeks, again, it is in my assumptions, equals assumptions there. So again, copy this to the right. Okay. So this is what I was talking about, repeating certain things, push forward. Because I could have as well just gone the other side and said equals this times this times this times this. But I want somebody who is looking at this spreadsheet to know that these are the items that I'm actually using. Yes, they're already there in my assumptions, but I'm linking my assumptions to this particular worksheet so that I'm able to let the person who is going to use this understand what is happening. The prices are in column C. The share of sales is in column D. So I'll come here and I click equals. what is in here, 7,000, assuming they're properly aligned. Then copy this down. Because you only do this if you are sure. And I repeat, you only do this equals if you are sure that espresso is in that, the first one on the list in your assumptions, and the next one, and they are all matched as they appear here. Otherwise, you may need to use VLOOKUP so that if there is a change, they still picks. So these were percentages. You can just format them. Okay. So you can see we are doing nothing much, nothing advanced here, other than equals and then pulling numbers forward in the other months. There's really nothing advanced. So for us to compute our revenue for espresso, which sells at 7,000, which has a 10% revenue share, we are going to get a formula here equals, we have our 2,000 there. This 2,000, I've deliberately left it in that position so that we can continue to learn our cell referencing. Otherwise, I would have linked it also going across up to December. So that 2,000 is only one entry. And you want it to be used going to the right. And when you copy formula downwards, you should still continue referring to that 2,000. So meaning this will be an absolute cell reference with dollar signs both on the column and on the row. So that means that position is locked both on the column and on the row times the daily target. So when I copy to the right, I want it to go to the one for February. When I copy down, I only want to remain in that row number 5. So meaning I'll lock my row reference, but I'll leave column F free. So here I only lock the row reference times 6 days a week. Again, here I will also lock only the row reference times 4.5 weeks to give me a monthly total. Again, I only lock the row reference times what have I done? This one should be this. 4 and then times 7,000. So here, as I copy to the right, I want to maintain 7,000. But as I copy downwards, I want to move to the 8,000, 9,000, and 7,500. So meaning I'll lock only the column, but leave the row times the share for that item. Again, lock only the column and leave the row. So you see, I compute that figure for espresso. So in a month, that item will be selling 2,000 customers walking into a shopping mall times 1%, 6 days a week, 4.5 weeks a month. And then that will give me, we could have actually simplified it. Let's try to simplify it further so that what we preach is what we get. Let's first calculate the number of customers here. Customers. We can actually say equals the 2,000 F4 times the 1% times, and that one I'll make sure it is locked to the row, times 6 days a week locked to the row, times 4.5 weeks a month also locked to the row. So 540 people will be consuming. Then I can now copy that across. Okay.
CPA Kakara, is it possible to enlarge the screen?
Yes, it is.
Oh, thank you.
Is that okay? Is that okay?
Yes,
Or should
can
I?
you enlarge it more? Okay,
Yeah,
because I have received about 4 people asking for enlargement.
I hope they are now able to see.
Yeah, thank you, sir.
Let me enlarge it further.
Participants can also enlarge the screen on their gadgets, isn't it so? Yeah,
I don't know.
they can.
Okay.
They can
So
expand it. Thank
in
you.
January, we have 540 customers that will be coming to our coffee store. So then here we can now calculate the 540. Of course, I will have to lock that row times 7,000. I need that column locked times 10%, and I need that column locked. I enter. So 3780. So this is the simplification I was talking about. Instead of doing the formula here and confusing everybody, first compute the customers, then get the customers, apply the price and the share. So then now this one, if you have done your cell referencing correctly, it is just copying to the right. Or alternatively, again, you may want to add in another third angle where we had the display units. So maybe instead of having everything full figures, you may want to display them in thousands or whatever. So that is a choice you can make. Okay. So again, this one is just copy down. So and instantly you have your cells. No complex formula here other than logic. So I told you there's nothing advanced about budgeting. It's just you being logical in what you do and knowing that certain things have to move in a certain way. So here we'll have our total sales now, just a sum. So you have 5 million for that month. You can copy to the right. Let me remove some decimals. So let me just format this without the 2 decimal points. Okay, so this line here, total sales, or you call it revenue or whatever it is, or total income. So this one is going to go to our income statement. So this is what will go to our income statement. Okay. So we are done with our revenue. If there are Any questions? I'm happy to answer them. Let me see Q&A.
Thank you. As you see, Q&A, there are concerns of locking in the chat.
Yes.
Some of, yeah, colleagues try to
Locking
help the
is-
others, but yeah.
Locking is always a challenging subject. And in the 2 hours we have today and 2 hours tomorrow, it can actually be on locking alone. But I can share some material later on if somebody approaches me, where you can go online and maybe read more about cell referencing. Here is saying, organizing the webinar, my Excel won't open budgets under new. Please repeat for me the function automatically. Yeah, it may not open. Are you online? If you're not online, then it's not going to download, because it has to download. So, because somebody is saying, thanks for organizing this webinar. My Excel won't open budgets under new. Please repeat for me the function. And it's not opening probably because you are not online. Please make sure you have data and your laptop is connected to the internet so that your Excel is able to download. Then some Mary Amunge is saying Godfrey also demonstrate practically. I don't know what that means. Someone is saying, how do you lock? Okay. Then how do you put a degree of precision to 1000? Okay, let's go to maybe degree of changing numbers to thousands. That is simple. For you to divide these numbers by thousands, you must have already deliberately decided from your planning part that you want your numbers to be shown in thousands, okay, not as full numbers. So in your planning, that should have been already decided. So when you are doing this calculation, where you have F8 times C11 times D11, okay, you should now decide here that you'll divide these numbers. But of course, once you introduce the division, you must remember your body mass. What goes first? So I think these are multiplications. They go before. You need to first put here some brackets. Otherwise, when it reaches here, it will divide before it multiplies. So put brackets there so that it does the multiplication, then the result is divided by what is on your assumptions here. Sorry. So what is in your assumptions? Divide by, I think we had 1000 somewhere here in assumptions. This figure here. So divide by assumptions D40 and make sure that that is locked. So you see that now becomes 378. And I can now decide that all this will follow the same logic. But that should have been part of your planning. You don't just wake up and now start saying, I want to divide these numbers by 1000. Of course, yes, you can, but it will require you to do some extra steps before you finally have them. Okay, now let's move to take these numbers to our income statement.
Godfrey, excuse me, there is a comment from in the chat from Adam. How do you make sure the budget headings don't move into hiding, especially when you scroll down? Okay,
you can put a freeze pen, for example, here. My headings are in row number 3. Let me even make them bold so that they stand out. So I'll go to row number 4. You go to view, okay, freeze pens, and then I'll say freeze pens because I want to freeze it at that row number 4. So I freeze that. So you see it draws that line just below my headings. So when I move down, that is maintained. So it is freezing pens. Okay. Let's go to our income statement. Again, we'll come to column F, enter equals, go to your assumptions and click on January. So assumptions F5, because I want to copy this to the right. So when it comes to numbers, again, don't worry, we say that is an issue of formatting. Control-1 to open up the format cells dialog box. Select date, click on custom and change what is there to M. Okay. So then that changes January to all the way to, I hope I'm up to December. 1 month missing. Let me just increase this a bit. Okay, so again, for freezing pens, I'll come to the row number 4 because this is in row number 3. So I click row number 4 and I don't click it from a cell. I click it from the numbers that are displayed on the left here. So I click on that, put my cursor there. You see it forms an arrow pointing to the right. I click, selects the entire row. Then I come to freeze pens. So you see that is now frozen. So revenue, we have already computed our revenue and is equals. We go to our revenue sheet and we pick the total revenue for January. And we can just copy this to the right. Okay. Cost of sales, what did they tell us our cost of sales is? It is equals sales times, in our assumptions, we have a figure there of 30%. F4 to lock that. Now you can choose here. Do you want this as a number, absolute number, or do you want it with negative? So I'll want to display my expenses as that. And copy this to the right. So when you copy to the right, always go to the laser and see whether it's doing the right thing. We double click it so that it shows you whether it is picking the right figures there. Otherwise, you may just copy to the right when you're copying that formula to do the wrong thing. So double click and it will show you what's doing. So gross profit, it is simply revenue minus cost of sales. So this one will just be a sum. Copy to the right. Gross margin, simple, equals gross profit divided by your sales. Of course, sometimes you do this and it just turns 0.7, but it's just formatting. Put a percentage there. If you want more decimals, increase decimal places and then copy to the right. Salaries, we had this. They are per week, remember. So we'll have equals assumptions. We have salaries 200,000. Okay. We want to maintain column D, so we lock that column D times how many weeks? A month. 4.5 weeks for January, 4 for February, like that. So we want to maintain row number 9. So we lock the row but leave the column free. So enter. So then other variable costs, this was a certain percentage, of sales. So we come to assumptions, other variable costs, 10%. F4, we lock it on both sides, times. We come to our financials here, times your revenue for that month. Okay. So these ones are supposed to be divided by 1,000, these ones. So again, don't forget, once you have chosen to divide your numbers by 1,000, please maintain. Otherwise, you may have some that are in 1,000, while the others are not. So divide by that figure there and lock it on both directions. So once you have done this and you have referenced properly, the next thing is just copy this all the way up to December. Okay. So then you have your total operating expenses. Again, please choose. Do you want them as positives? I think I prefer them as negatives, so that I know what I'm trying to arrive at. So always okay. So revenue is positive, all the expenses are negative. Okay. Then you have your EBITDA, that is earnings before interest, taxation, depreciation, and amortization. So that is equals your gross profit plus your operating expenses. Okay. All right. So next, you have the margin, EBITDA margin. So it is that divided by EBITDA divided by your revenue. Okay. So next we have interest. Remember, we said we are going to borrow 5 million from the CPA Sacco to finance this business. So we need to compute the interest, and we also need to later on finalize our income statement. So let's go and compute interest on this worksheet that I've labeled loans. Okay. So all these loan amount, all these are on the assumptions. 5 million. So I'll just copy this down. Okay. So this is going to be the first period of payment. And I'll just come here and say equals that first period plus 1. So I just want to number 1, 2, 3 up to 12. But I want it to be more dynamic. So 1 all the way up to 12. Okay. So each 1 will be January, 2 will be February. So that's how I'm going to pick it up. So for you to be able to do this, and we're assuming it is on reducing balance, of course, we'll need two formulas. One to compute our interest and the other one to compute our principal. These two formulas are in the section called financial formulas. So for interest, we will need a formula IPMT. And for principal, we'll be using a formula PPMT. Okay. And once we have done that, we should be able to get our closing balance later on. So for interest, when you enter the formula equals IPMT, that formula returns the interest payment for a given period of an investment or a loan based on periodic constant payments and a constant interest rate. Okay, so we're going to have 12 periodic payments for this loan at a constant interest rate of 3% per month. So when I open brackets, it says, what's the rate? That is 3%. Now, if this 3% was an annual rate, I would divide it by 12 or by the number of periods. That will be, if it is quarterly, then it would be by 4. If it is half year, then it would be by 3. But since this is monthly, a monthly rate, so I'm not dividing it. I'm using it as it is, F4, because I'm going to copy this formula to the right. I don't want to leave that position. So I lock the cells, comma. So it says for which period are you calculating? I'm calculating for this first period. So this one here. Okay. I'm copying to the right, not down, so I don't mind about locking there, comma. Number of periods is, of course, this is 1 year, F4 times the 12 months. Just in case we decide that let's now stretch this loan to whatever number of years. So it's always good to be dynamic in what you do. Yes, I would have just picked the 12, but just in case we choose that, let's now change from 1 year to 2 years. So I structure that knowing that it's already taken care of, comma. Present value, how much am I taking today? That's the 5 million, F4. Okay. Close brackets, and I enter. And I may want to divide this by our famous value here, F4. And I copy this all the way. Okay. So you can see the interest reduces as time goes on. And then I can now come back to my income statement and I say equals what I've just computed here, 150, copy to the right. So I have my interest there, profit before tax. We don't have fixed assets, so there's no depreciation. So I'm adding the EBITDA, which is 7,410.8 with the interest, and that will be what I get for that line. And then you can now have your tax. And we said tax will be accrued at the end of the year. So you can come here and say equals sum you can sum all this times the tax rate, which is 30%. F4. But of course, you may need to change, because what if you sum and the total is negative? So you may need to change this formula to say if the sum of that range is greater than 0, comma, then get the sum of that range times the 30%, otherwise put a 0. So this takes care of whichever situation. If the profit for that entire year is more than 0, it will compute a tax. If it is negative, then it will just put a 0. So this is a minus. Okay. So then you can now come comfortably here, do your PAT. And you have it there. You may also want to have your cumulative for the periods for purposes of your balance sheet later on. So equals sum, start from that cell, F20 to F20, but I lock the first F20. So sum absolute referencing for F20 to relative referencing for F20. So I enter, but as I go to the right, you'll find that it adds up everything. So this line will be used for my balance sheet. Okay, so that is our income statement. And we have moved quite well. I think I've finished it 7 minutes to 1. Let's now look at some questions. And then tomorrow we'll pick it up from there. Ambrose, do you have questions for me?
Yes, thank you, Godfrey. Maybe from Susan Abigail. She's asking, how would you incorporate additional equity financing into the model for the side hustler? I am interested in knowing more about pre-money valuation and post-money valuation. Yeah.
Now we are going out of a simple thing that was supposed to be budgeting into valuations and what. Now, all that is in our financial modeling course. If you contact us at Data House, we can, actually, this is a borrowed thing from that course. It's a very expensive course, but it's a very useful course. So if you contact us and you are interested in financial modeling, we can take you through from basics of financial modeling. Of course, here we're a bit rushing over things, but there we take you step by step. and do all the way up to your evaluations. And yeah, why not?
Yeah. Solomon Kankwasi is asking whether we shall send the presentation. Yeah.
I shared it, I thought.
We are going to send the workbook. Yeah. I don't know whether what he means is the one you are working on.
Ambrose, wherever you are, your network is just. Ambrose.
The one you've discussed. Are you able to hear me?
Your network is not very good. I don't know where you are.
Yeah. Can you read the Solomon's question in the Q&A?
Solomon Akankwasa, can he send us his workbook so that we can follow up very well tomorrow? Yeah, I've already shared the workbook you're supposed to be working through, but I can share the completed one later on. No problems. Then Vitaly Sopoya, thanks a lot for the presentation. See you tomorrow. Yeah. Copy of the spreadsheet. Yes, you'll have it tomorrow once it is completed and we're all happy with it. Then the one of hiding formulas, I will show you that one tomorrow. Just remind me. Then interest calculations on loans receivable as a core business in respect to revenue forecasts. I don't know what that is, but maybe you can send me a private email later on and explain what exactly you mean. Okay, I think the comments in the chat are fairly addressed. Maybe in this, thanks a lot for the presentation, but we need to have this so we can learn more. Yeah, sure. Like I said, I'll share the completed workbook, and I've already shared the one I'm using, but once it is completed, I'll also share that one. Then someone is saying, where was the workbook shared? I shared it in the chat here, but if you want, I can reshare it so that maybe you want to. Let me reshare it so that you can. Oh, error. Okay, that's the workbook. Those who want to download it, I've reshared it again. Even the presentation. Okay, let me share the presentation as well. Okay. So I think thank you for attending this webinar. This was part 1. We'll do part 2 tomorrow, where we're going to do our balance sheet and cash flow and see whether things will be in balance and see whether we will have 12 months budget working out for us. So thank you. See you tomorrow.
Thank you, sir. I don't know whether JB has a day 1 wrap-up comment.
No,
So
I
in
can
case
cross.
you have, yeah,
No.
thank you. Thank you.